Hey there, folks. It's Carmasino here at Chaikin Analytics. I'm the Chief Market Strategist, and this is our sort of weekly video stock of the day here on Chaikin Power Feed. We kind of bring the articles to life here a little bit. Typically, we'd write about something like this, but couldn't resist the opportunity to talk about Salesforce today, symbol CRM. Everybody's talking about it. It's obviously down pretty heavily, and words like dive, plunge, plummet, get crushed are all in the headlines, and then following by the name Salesforce.com. And obviously, we've got to take on it. We've had to take on it now. I would think since the middle of April. I just had to glance at the chart real quick to make sure. And you can just see how the trends are evolving and things are changing. But two key indicators on our chart would have helped you avoid this name completely. You would have never been in it. If you were, you would have protected it. Or if you're in it for a trade for the last year, you probably would have been selling it. So let's take a look at the chart so you can see what I'm talking about right now. All right, everybody, here is the chart of CRM, which is Salesforce Incorporated. And you can plainly see, obviously, we're down about $55, roughly 20% of the stock's value from the previous close on the 29th. And what are we seeing here? Well, this picture does tell a story. We saw the beginning of and this is a 52-week look back. So back in this time last year in 2023, there was sideways action here, right? So you had sort of this chart pattern, the price pattern kind of sitting in this kind of a range, right? Once it broke out, the relative strength was clear. However, if you look right down here, there's a band that goes from yellow to green. That's our power gauge rating. So we upgrade the stock prior to technicals. It makes this massive move higher, then starts to break down here. Right now, that was around 275 or so, and that's really not looking, fantastic. So if I just undo these just to get those out of the way a little bit, what I can show you is a way that you can see where this really started to materialize right around this price level, which I'd say maybe somewhere around 265 to 270. All right. So what happened there? Well, our relative strength broke down. And that's really what you want to pay attention to when you're looking at our charts. However, I'll point out one key thing. The power gauge rating also downgraded it here, really starting at the week of April 15th, that Monday. It went to neutral plus. And why? Well, because it broke its long-term trend. So when the price action is against our rating, we automatically downgrade. It's an algorithm. We don't get in there and make any changes. The algorithm downgrades it. It's an alert to let us know there's a problem. When technicals follow through, that's really sounding the alarm, telling you to get away from it, protect it, or just don't touch it at all. All right, folks, there you have it. We saw how CRM, Salesforce, was kind of starting 52 weeks ago. It was in a bit of a range. It broke out. Our power gauge rating upgraded it prior to the technicals. The technicals confirmed the rating. Then the reverse happened. The power gauge rating downgraded it to what we call a neutral plus. That really is a stock that has been performing but broke its long-term trend. And that's sort of an alert. But what happened? The technicals validated that rating downgrade. And obviously that would have been the tell to start to either unload, lighten it, protect it, or just avoid it completely. All right. Hope this helps. We'll talk to you next week. Take care.